TD Bank has become the most shorted bank stock in the world. According to Finance Professor Ing-Haw Cheng, this is a reflection of fears about how sound the financial sector is.
Investors are somewhat pessimistic on the financial sector right now, just given that we see so much trouble in housing markets.
What makes TD a target? Its exposure to Canadian real estate, as well as the American banking sector. There's also its plan to acquire U.S. regional bank First Horizon, which many worry TD is paying too much for.
Investors are worried that TD is no longer getting a very good deal.
Short selling is when an investor borrows a stock and sells it on the market, planning to buy it back later for less money. Short sellers bet on and profit from a drop in the stock price. It has a high risk-reward appeal, as it can make you a lot of money if you're right, but you stand to lose a lot of money if things don't go your way. In fact, your losses are unlimited, because there's no telling how high the share price can go. It's not like going long on the stock market, where the most you can lose is the amount you invested to buy the stock. Now, the value of bets against TD have risen 45% in 2 weeks, jumping to more than $6 billion last week. Many analysts aren't too concerned about TD, though. It's a large, diversified, well-funded bank, closely watched by Canadian regulators.
The situation is not as dire as some of these short sellers might believe. You might see actually the bank stock run higher and quicker.
Some believe TD shares could climb in price rather than drop, causing what's known as a short squeeze.
I'm not particularly worried about TD Bank.
But maybe hedge funds betting against the bank should be concerned. Gaviola, Global News, Toronto.